Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's June 1st. This will be our chart lesson for the day, and we're starting a new month. It's hard to believe we're already into June. Seems like we just started January no time ago. However, a couple of things actually real quickly before we get started. Tomorrow is my surgery for my cataract, so I will be out all day tomorrow. There'll be no mid-morning chart. There'll be no YouTube lesson. I'm assuming that I'll be able to go to work Wednesday, but I don't know yet. I'll just have to see what the doctor tells me and how my vision is. But supposedly this is a relatively minor procedure that you go in and you're out pretty quickly and you're back to normal fairly quickly as well. So we'll just have to see. At this point, I'm planning on being here Wednesday, but if you don't see a mid-morning chart on Wednesday, you'll know that most likely I didn't come in for whatever reason, that either the doctor told me to take the day off, or I just wasn't able to see well enough, or I wasn't feeling well enough, or whatever. So, but as long as I'm feeling good and I can see, well, Wednesday will be a normal work day. Uh, but for tomorrow, for sure, no YouTube lesson, no mid-morning chart. And if you would, please hold your emails on trade questions. If you got emergency email, send it to me so I can get to that first thing when I can read my email. But please, if you would, just hold your trading questions and stuff like that until you hear back from me. So there, you'll get an out of office message from me. So as long as you're getting that, you'll know I'm still out of the office and not back, and I'll turn that off as soon as I'm good to go and working again. So if you would, just please hold those trading questions until I get back, because I won't be able to answer them. And it's just easier for me if they don't pile up while I'm gone, because I'm one of those kind of people that I'm going to try to answer them all. And it would be very helpful to me if I didn't have to worry about them piling up while I'm gone, and I can just start fresh on Wednesday or Thursday or whenever I can get back to work. So um, I appreciate all the messages and notes that I got. Uh, Hopefully this goes well, and after tomorrow, hopefully my vision is slowly getting back to normal again, and then I can kind of have normal vision once again. So, but I appreciate all the well wishes and so forth, and I'm grateful for all of you. But anyway, let's talk about today and get this done. This won't take long today. This was a very slow type day. In the big picture, this is a range day, it looks like. Notice that we trended down rather quickly, but look how long it took us to get back up there. We did break higher momentarily because there's a two-tiered channel working up, and you couldn't really find this channel until we made this low right here, and you could draw that trend line, and then if you drag it up, it just doesn't fit well on the top. Notice how we pushed through it a few times, but I believe this to be, you can see where we bounced off this midline, both sides multiple times. So I'm fairly confident that this is the correct two-tiered channel. There is a short-term brown channel up through here, and that brown means nothing other than it just helps distinguish it a little differently, so the chart doesn't look too busy with all these blue lines all over it. That's all. That's the only reason I marked that brown. Obviously, there is a color distinction in the arrows, so make sure you understand that. I'm going to mention that one more time while we're talking about it. The arrow always points at the signal bar. The signal bar is always the lowest or highest bar in the swing. Your entry is always one tick above or below the signal bar on a buy or sell stop. We don't enter any other way. And so don't confuse entering down here or the next bar or the bar after the signal. The signal bar is always the lowest or highest bar in the swing, always. And our entry is always one tick above or below the signal bar on a buy or sell stop. Somebody asked me today about a buy limit stop or a sell limit stop, and they were talking about their broker wouldn't allow those in the overnight. Well, we don't use limit stop orders. Those are totally different. I'm not even sure if they allow those in the CME at all, to be honest with you. But it's not an entry we use. We use limit orders and we use stop orders. Buy and sell stops to enter our trades. Buy or sell stops for our safety stops, and limit orders. The only time we ever use a limit order and we only use a buy or sell limit. We don't use a limit stop. We use a buy or sell limit order to exit our trades. And that's the only time we ever use a limit order. And it's just a regular limit order. Buy limit or a sell limit. It's not a limit stop order. There's a difference. So make sure you know that. Make sure you know what you're doing when you enter your trades. Because if you go out there and enter the wrong trade, you could get yourself in huge trouble. So always use for your safety stop is always a buy or sell stop, nothing else. Because if you're wrong and prices break lower, you want your stop triggered and you want it to automatically go to a market order. Because if you used a limit order and went through and you didn't get filled, you may not ever get out of that trade, and you could lose your shirt, you could lose your house, you could lose everything you own. So make sure if you're trading futures, you understand those orders and you know what you're doing. So fair warning there. Any kind of safety stop is always a buy or sell stop only. Do not use a limit order for your safety stops of any kind. So please understand that. It's very, very important. Again, this is just a range day, but really we trended up the entire day. So this was an uptrend day, just a weak one because it's the bigger picture is really a range. If I back out here, you can pretty much see that this is a range day. But you can see short term, the trend, the EMA is pointed up. Most of the prices are above it. So it's a trend day. But it's a very weak one because prices are really just kind of stuck in this price range here. So and you can see we've traded back into the underneath here. See if it holds. It might hold. It might not hold. We may go higher yet still because there's still 45 minutes left in this trading day at least. So it could go higher. A couple other things before we get to the trades. I measured these first two legs. Look for a measured move. And that pretty much, really, I'd go from right there. That pretty much gave us a target of the overnight highs. You can see we pushed past that a little bit. That's pretty much where we're going to top out, it looks like at this point. The other thing I did was I measured this leg up and looked for a measured move from there. And that put us right in here, about where we got a little correction there, but it didn't tend to, neither one of them, both of them would have given you a great target to shoot for. But prices went even further. So, and that'll happen occasionally. Usually you'll come up short, if anything. Very rarely do you overshoot these targets. But you also, I didn't measure this one, but you also would want to measure that target and then measure from there. And you can see that would have been your next target. We never got close to that. I mean, the market's still going, but it's anything after this gray period, we're not really interested in. It's after 2 o'clock, and we don't trade after 2 o'clock. It's just too late in the day. There's a couple reasons for that in case you're new. One is the morning tends to be that some of these afternoon moves. Occasionally you get some really good moves after 2 o'clock, but it's rare. And the problem is if you have a losing trade up here after 1 or 2 o'clock, you don't have much time to make it back before you're going to get kicked out around 3 o'clock by your broker. And so you can't, that's the main thing that I don't like about trading late in the evening or late in the afternoon is because you don't have time to make up for it. If you have a loss in here before 10 or 11 o'clock, you got the rest of the afternoon to make it up. Well, you don't have that option. If you have a loser late in the day, you're probably going to end with a losing day most likely, unless you've already had a lot of winners prior to that. So you're best to stop trading around 2 o'clock. And plus, if you get in one of these trades like right here, this is where 2 o'clock hit. And we're already to 2:30, and there hasn't been anything going on. There's just not much movement right there. And a lot of times it'll just sideways on out to 3:15 and close. And so you get stuck in a trade that you can't get out of. And it's not worth sitting there on a trade for an hour, hour and a half, and then finding out you got to exit with a loss because you couldn't get out of that trade. So that's another reason. So it's just not wise to trade after 2 o'clock. I mean, if you're managing a runner that you carry into 2 o'clock, that's fine. Just don't enter any new trades after 2 o'clock. That's the idea. So, but I wanted to show you one other thing. And if you hadn't heard me mention it before, I always say that you hear about wedges and flags and all these pennants and all these patterns, and there's no such thing as any of those. And I'm fixing to show you a great example of what causes these. And this is one right here. Notice the brown channel working up, but notice there's the two-tiered channel working a little flatter, and the two-tiered blue channel is obviously the dominant pattern. And so what happens is price action, the prices get hung between two different patterns. One of them will eventually win out, and guess which one won out? The blue two-tiered channel. Notice that you got a break of the brown one and two legs to a new high, so it played out as well, but prices never could push through there. And if you just look, it looks like, if you follow these other people that teach you about pennants and stuff, that's the way they draw it. And they teach you to trade in the direction that it breaks out. So you would have went short right in here, and it would have come back and stopped you out, and then gone where you expected it to, and then it would have bounced and gone higher still yet again. So that's, if you understand price action and you know what the real patterns are causing that, this is not viable, right? I mean, sure, prices look like they're playing off those two lines, but that's not what's causing the issue. The issue is the two trend channel patterns running into each other and giving you, both of them giving you support and resistance. And one of them will win out, and that's how you know where prices are really going to go. If you see this blue channel and prices turn down here, you know that prices are headed back to this midline and probably all the way back to the trend line. However, if you're trading the other stuff up here, they're just going to teach you to go short right there, and you probably got stopped out and then watched it go a little lower, and then by the time you decide to jump back in right in here, it bounces again. So there's no such things as pennants and flags. They're there, but these patterns are what causes them that you see on my chart, not this. There's not a real pennant pattern. I hope that makes sense, but I try to always get that across to people. Don't trade those silly ideas and believe in some of those patterns, because they're just not real. This is what causes them. Competing trend channels and support and resistance and so forth that run into one another, that cross each other's paths. And all it was this two-tiered blue channel is the dominant pattern, so we couldn't push through there across here, but yet you still had a short-term, this brown channel working up. So I hope that's clear. There's also another little trend working down through here that I had taken off. I forgot to put on, so let's put it back on. You didn't really need it, but let's put it on there anyway. So let's back out now and talk about the trade. So I hope you learned something on pennants and flags and all that silliness. But if you didn't tell already, I'm not a fan of those things. I'm going to try to back out here where we can really see this. You've seen the big picture, so you know what's going on. Okay. Notice here we had a couple legs up. There are two legs up. This is before 7 o'clock. There's a nice short opportunity here, but I didn't mark it. You might have taken this short. If it broke higher, I don't know if it broke higher and turned down or not. It may have broke lower and turned up. And then once that closes with no body, you don't want to go short below it. So depending on how that worked out, you might have gone short there if you were already trading, but most of you shouldn't be trading before 7 a.m. my time, which is Central Standard Time. You could really start trading about 6 or 6:30, but I definitely wouldn't trade much earlier than that. But there's two legs up, and then we work back down here. So, however, there is a second entry long here. Notice this pullback, first entry, pullback, and it's right at the EMA. It's the first break, really close outside that little trend. So we're probably prices will probably try to make a retest of the high. And what I know, it broke lower here and turned and went out the other side. So you could go long one tick above that. I wouldn't wait on this bar and go long right here, right into those highs. It's just too close. But if you can get in right here, that was a nice quick scalp, and you wouldn't have got anything else out of it. And then once we turned back down, then there's actually a failed second entry long there, but you don't want to go short right into the EMA. So I would wait, and then notice how it pushes through the EMA, pulls back, and it kind of confirms that. It was pretty easy to find this trend line off this side, and that's all I did was copy that and drag it up, and it's probably right along like that right there. And so really you can look at this as a double top. So there's really two legs down, and so that's a failed second entry long. I like that. It does kind of confirm that trend line. So fairly bearish bar. And we already pushed through the EMA. So I like that one. And you really don't get another chance to enter this one, at least not on my chart. There's another failed second entry. Actually, I wouldn't. That's not quite high enough to get a second entry out of that. So really, you don't ever get another. You never really get another failed second entry or anything here. We do finally make a new high right here, but that's your first break, and then we bounce down here at the lows. So you just don't get another chance. If you didn't get short right there, you just don't get a chance at this one. So, and you probably would have had a runner on that. That's the good thing about that. So you could ride that all the way down, and that's exactly where I'd look to exit, right along that support. And when it bounces right here, that's where I'd exit for sure. So I actually like going long here. Notice you made the low, you test it once, you test it twice. That's a big gap in there, and generally you like your double test to be a little closer, like across here. But with the break and the new low, and that being strong support and way away from the EMA, you're probably going to get a bounce back to it. So notice I made it green. It's aggressive. So you just need to be careful on that one. But these trades, a lot of time you'll catch a major low or high for the day. And actually that was the low of the morning. Notice that we came back, we never could get below it again, and that was the low of the day. Actually, it wasn't the overnight low because the low's down here, but for basically from that point on, that was the low of the day from just after 8:30. And so that's why I like those trades, because a lot of times you catch them and catch these big moves, and you can ride them all, all the way to the top. So keep that in. We came back and tested it again, but no signal bar. But look what happens. You got a new high up here, and you come back first entry, and you come back and you get a second entry long. It's a double test of that low. Notice we tested that, then we made that low, I guess you should say, and we came back and tested it once, twice. That's a second entry long. You're still a little ways from the EMA. Nice, perfect bullish bar. Quick, easy move. It comes back one more time, and it gives you another test. It is making lower highs there, which a lot of times that means this may give, but we've bounced every time here. You still got a little room back to the EMA. I'm probably going to take that trade. And that's a fairly bullish bar. It's one tick off closing off the high. That's a good sign when it opens here and trading down here, and then by the time it closes, it's almost back to its very high. I'd take that trade. And really, you can argue that you got another double test of that low right there. 1, 2. And off it goes. And if you catch, you wouldn't have got a runner on this one. It's possible you got stopped out on this one. I'm not sure how far it came back. You might have got stopped out on it too. But you might have got a runner on this one, depending on how you played it and how prices acted there. I'm not sure if they came back enough to get the break even or not. But this one takes up. You get your close outside new high, and it makes that one more push. Generally, I'd tell you to wait on a lower high, but that's just as good as a lower high. It's a trap right there. Okay, I'm sorry, I had an interruption. I think we were talking about this trade. We talked about it coming up here, and you get you've got a little, this is the arrow just showing the measured move. So you can see you've got a trend channel working up here, and you can see it losing momentum and fading off. You get your close outside, move to a new high. And normally I would tell you to wait on a lower high here. But notice what it does. It breaks higher. And this is just as good. And it traps everybody. And then look how bearish that is. Closes way down here. way away from the EMA. I like going short there. That's going to trap some longs. Really, you've got your break and 2 legs up. And again, you probably better to wait on a lower high, but this is just as good because it's like a trap. And so if you understand that, you could take that trade. If you don't, then you need to wait on a lower high, and that doesn't come till way down here, and it's too late. So, but I like going short right there, quick, easy move back to the EMA, and only because of the way it's set up there. And then, of course, you're running, you made a new high, you're working down first entry, and then you get a second entry right here. I like that one because you got this little channel and you get a break and new low, and then this thing, and that big bearish bar, that's where all the people that don't know any better are going to go short down here at the very end of the move, and then it's going to bounce on them. So this is just a trap basically here on the second entry. And look how it rockets up real fast. That's because all these people that got faked out going short have to exit. And anybody that got short up here that's still maybe riding a runner or something, or just riding their regular trade, they realize, hey, that's about all I'm probably going to get. I got to exit or I'm going to get back all my money. So that's a nice setup right there. It's a second entry long, nice bullish bar, but this is the key, was that big bearish bar that ticks one tick lower and then reverses. You did get a little resistance at the EMA, or this thing probably would have went on out the other side in one bar, but when it breaks higher here, there was a lot of people, you can tell, watching that, and you see how it rockets up real quick. That's a great setup. There's another piece to this pullback here as well, and what prices are doing is they're coming back and testing this resistance area. It was resistance before. If you draw that line across there, you can see it. There was resistance right there. And prices always, now they almost always come back and test it. So it was no surprise. And that's another reason I like that, because it bounces right there. And prices run up. You get a higher low right here, but my signal bar is no good. If you had a good signal bar, I wouldn't have any problem going long there. Just not a very good one on mine. And then you wouldn't have had the two-tiered channel yet, but you would have drawn this brown trend line right here. And we actually work back and confirm that right here and get another nice bullish bar. Generally, you'd want to see a second entry or something, but it's all in one move and you just don't get that chance. You might wait on a higher low right here. But if you don't take that one, you definitely don't want to enter, because we're just kind of working sideways here. I wouldn't enter in any of this. So you might have entered right here. I didn't mark it because this was the better entry. This confirmed your trend line. And if you didn't hit this one, then you got congestion. And the reason I really didn't like that one is because this bar, it closes in its upper 1/3, but it backed off that high. And this one has a little stem up there too. And so you might wait on this next bar. That would be the better move to see if you get a failed second entry short, and you do. But by then, you got 1, 2, 3, 4 bars stacked up. You got all these highs you couldn't break through, and a couple of these have no bodies or small bodies. So you just have to skip it by then. So it's just not a good setup there. If you'd entered into either one of those, it still would have worked, but that would have been the only place I said maybe you enter as a buy stop, right there on the higher low. You could mark that one green. Oops, thought that was green. But anyway, you might enter there, but you can't enter after that. And you just never really get another entry up through there. You get a bounce right here, but again, you got congestion. You see what would have happened to you. You run down, tries to go higher once, twice, but notice you got to close outside and 2 legs up right there. So that trend channel has everything in place that you could say, okay, we might get a reversal here. So when you get that little trap, you want to draw that trend line, and you can see prices working off that trend line. And when that breaks higher and turns down, I like going short one tick below that. This is what you call an engulfing bar. Somebody has asked me a couple of times. I don't think I'd go short way down here, but when this breaks higher, if you like, you're anticipating maybe this breaking higher and giving you a setup over here. And so if this breaks higher like that and instantly turns and goes out the other side, that's a good sign that they've trapped longs. And you can see that. Look how it rockets down again. Put your sell stop one tick below that. And if this bar is not too big, you could go short below it, but that's not a very good bar to be going short way down here. You need to get in a little closer to the turn down up here. It still would have worked, I realize that, but I would wait. It's just a really huge bar. And then we run down and you just kind of work sideways back. And you don't really get a setup here. There's not room to get out before the lows here. And then finally, it bounces right here. And you get a nice bullish signal bar. Plenty of room back to the EMA. I like going long there. You don't know that you're going to go higher. And normally you need to be careful with this because we are working lower. But you got enough room to get out either way there. And this thing just keeps going. And notice when it pushes through up here and pulls back, that's what you call a breakout pullback. I generally tell people to be very leery. This is probably the least reliable trade we've got. So you got to be really careful with them. But when it pushes through the EMA and pulls back and it tests this too and gives you that bullish of a bar, you're probably going to at least get another leg up. You end up just getting a scalp out of it. And then we spike up. This is what you call a spike in channel. It spikes up and goes into this channel. And notice I marked. Notice you make that new swing low. It's lower than that one. So you're working up and you get a first entry short and you try to go higher and you get a second entry short. But better than that, you should have drawn this trend line here and you'd noticed it fits up there and then you would have noticed it fits on your midline. And when we push through it here and you come back and you test it once, you test it twice and you get a failed second entry short as well. If you break higher there, you're probably going to go up to this, probably going to go test the trend channel line. And that's exactly what prices do. You don't really get a chance to go short here. And then it pushes back through and gives you a repeat pattern. Look how it spikes up, test it once, test it twice. Just go long right there. And you barely get enough to get out of that one, and then it sails off. So you actually, I don't know which way this one broke first. If it broke lower and turned up, you might go long one tick above that bar because it's another one of those engulfing bars. But the main reason normally I'd probably tell you to skip this trade because it does look a little bit congestive, but it's a repeat pattern of this right here. I mean, almost perfect. So. And notice how it gets just enough to really let you scalp out, and then that takes you in the 2 o'clock hour anyway. So there it is. It took me a little longer to do this today than I thought it would, but there was some good stuff to show you and talk about in there. So, okay, last couple of lessons I forgot to show you a copy of the blank chart. There it is. Without anything on it. So a couple of you had asked for that, so I'll try to remember to put that up each day. But anyway, I hope you had a good trading day. I hope all of you have a good trading day tomorrow. I won't be with you tomorrow, unfortunately. So again, no mid-morning chart, no chart lesson. And again, I would appreciate it if you would just hold your emails unless it's emergency. If you got an emergency email, some issue, be sure to go ahead and send me that. And that way I'll be able to get to that right away when I come back. But if you just asking chart questions or trading questions, please hold those for me. It just makes it easier for me when I come back and don't have a whole inbox full of messages because it basically puts me a day behind almost. So I'm going to wrap it up. I'm still almost 30 minutes today, but I'm going to wrap it up. Hopefully I'll be back Wednesday, but we'll just have to play it by ear. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.